Hi, this is Andrea with Account Ways, and today I'm going to talk about getting ready to file your business tax return. Before I get into the presentation, a little bit about me. I am a CPA licensed in North Carolina. I have 28 years of experience in corporate accounting, tax, and also with running my own CPA firm. I am a QuickBooks Online Pro Advisor. I'm a member of the AICPA as well as the North Carolina Association of CPAs. I am also a member of the DOPE CFO VIP Network and a founding member of the National Association of Cannabis Accounting Tax Professionals. And what this means is that I can help with tax returns that most CPAs and tax companies won't touch. So I'm trained to do that. Also a disclaimer, I am a CPA, but I am not your CPA. So anything that I am telling you today should not be construed as paid tax advice. This is just an educational video. Also, this information is current as of December 2022. And as we know, tax laws and codes and limits change from year to year. So this information is current for use during the 2022 tax year. The information I'm going to give you is geared towards C corporations, S corporations, and partnerships, but for you sole proprietors out there, a lot of the same information will be used on Schedule C on your personal 1040. December is a great time to think about and reflect on the year that is about to end. It's also the best time to prepare since you're still in the current year headspace. I know that once January 1st rolls around, my brain moves to next year's business plan, and it gets harder and harder for me to remember specific transactions that happened months ago. So I like to take some time in December to gather my documents and make any relevant notes for transactions that I want to make sure I give extra attention to while the thoughts are still fresh in my mind before I've gotten into the craziness of getting into a new year. One of the first documents I will ask when I take on a new client, I'm going to ask for a copy of last year's business tax return. Now with the IRS, consistency goes a long way, and there is information on the front of these business returns and also at the very top of the Schedule C on a personal return that should remain the same from year to year. You don't want to keep changing it around unless there's a good reason to change it. If you've changed your bookkeeping method, then yeah, you would want to change that. But the things that should stay the same from year to year are your bookkeeping method, your federal tax ID number. The date you started your business should not change. The date you elected to become an S corporation also should not change because it's happened. It's already happened years ago. Your business code numbers and business activity descriptions should remain the same from year to year unless you have a reason to change them, and that does happen. Your inventory tracking method should remain the same from year to year. Also, on the business tax returns, the balance sheet does appear on those returns. So I want to look at last year's ending balances because I want to make sure that I'm using those as this year's beginning balances. The business tax return also has a lot of information on shareholders and partners that I want to make sure is consistent from year to year. If you have fixed assets that are being depreciated in your business, I want to keep that information consistent. So I'll need to see your depreciation reports from last year's return. And then there's also certain expenses and costs that you may not have been able to deduct in previous years for whatever reason that can be carried forward to future years. So if I can see that carryover report, then I can make sure I'm not overlooking anything that you might want to claim this year that you were not able to claim in a previous year. And I only know about those if I am told about those. And if I have a detailed tax return with all of your supporting schedules and worksheets, I can find it. And also, when I finish a tax return, the first thing I do before I contact you to tell you I'm done is I compare it line by line to last year's return. Because this can tell me if there's been a significant change in a line item. I can make sure that it really should have changed significantly. Sometimes it will tell me that I'm missing information. I can call you up and say, hey, your car and truck expenses are a lot lower than last year. Is there a reason for this, or am I missing some information that I should be including in this year's return? So comparisons are great for checking yourself and making sure you're not overlooking or missing anything that you could be deducting this year. Articles of incorporation and partnership agreements. That's something you should already have, just like last year's business tax return, because it's already happened. You incorporated your business probably several years ago. So that document's already available, and that's something that I would need to see. And why do I need to see it? There's information that's very helpful on that. The start date of your business or your partnership is on there. Your list of partners or list of officers and shareholders. Initial contribution from each partner is on there. In the case of a corporation, your shareholders and owner percentages are on there. The state where your business was incorporated is on that document. If there are any specific profit and loss items on a partnership that are allocated to only one partner rather than split amongst everybody, I can find that in your partnership agreement. And also the method that you use for tracking your accounting records should be in that partnership agreement as well. And that's good information for me to have. Okay, now we're getting down to the real nuts and bolts of what happened this year. And that's going to be in your accounting records. Whether you are a sole proprietor or you are an owner of a corporation or a partnership or an S corporation, your profit and loss statement is going to be the basis for your tax return or your Schedule C. Balance sheet is required for C corporation, S corporation, and partnership returns. For sole proprietorship, a lot of times if I have questions about an expense line item, a lot of times I can get my question answered by looking at your balance sheet without having to call and pepper you with questions. So still helpful for me to see even from a sole proprietor. So you can just print these statements from your accounting software. You can compile it in a spreadsheet. If you're not familiar with how to compile a financial statement, a P&L and a balance sheet from a spreadsheet, do enlist the help of a bookkeeper to help you put that together. It will save you a lot of frustration. And also, the more clean and concise the records are that come to me, the cheaper it would be for you. In my practice, I charge a flat rate for tax returns based on which forms and schedules are included in the returns. However, if I have to spend time sifting through your bank statements and credit card statements and shoebox full of receipts to compile your P&L, I'm going to charge you by the hour for that portion of the work because that takes time and I need to be compensated for that time. So the more organized you can be ahead of time, the fewer questions your accountant's going to have to ask you, and the quicker they're going to be able to get the work done, and that will be cheaper for you in the end. Bank statements. I would like to see a copy of all of your bank statements from the year for your business accounts. At the end of the day, the balances on your bank statement should reconcile to the cash balance that are on your balance sheet. Please avoid mixing personal and bank activity in the same account. You should have a business account or maybe multiple business accounts that only have business activity running through them. Your personal accounts should not have any business activity running through them. If you've done it right, you shouldn't even need to give me your personal bank statements because there's nothing on there that I need. However, it happens, you take out the wrong card at the wrong store, and those things happen, but that should be the exception rather than the rule. And again, tax preparers, many of them are going to bill you by the hour if you have to go through your statements and separate commingled business and personal activity. So it's easier and cleaner, and if you are audited, it'll be much easier to survive an audit if all of your business activity is in one place rather than mixed in and commingled. Same with credit cards. With the credit card, if you get a year-end statement from your credit card provider, if you haven't done your financial statements yet, this would be a great document for you to have because it will show you everything you've used the credit card for arranged by category. So you can use that to piece things together. And again, just like personal and business bank accounts, you should also have a personal credit card, and try and keep the activity separate. Payroll reports. Your quarterly payroll tax filings help me ensure that the correct amount of payroll tax is included on your tax return on the taxes paid line. Also, it helps ensure the appropriate officer versus employee split for salary and payroll expenses showing up on the tax return because those do show up separately. So the first 3 quarters should already be available to you. You just want to pull down a copy of what was filed with the IRS for your federal withholdings and Social Security and Medicare. Copy of the same report for your state withholdings, local withholdings if you have that, and your state unemployment insurance. You've already got the first 3 quarters available. The fourth quarter should be available by the end of this month because that's when the deadline is to get those filed. Assets. Most of your purchases are going to be one-off things. It's going to be pens, printer ink, paper, things for the store, things that are going to get used up within a year, so you just record the entire expense on the appropriate expense line on the tax return. However, if it costs more than $2,500 and it will be used over several years, you're going to need to collect some information about that purchase because it's not an ordinary expense. It's a business asset that's going to be used over more than 1 year. So the information that I'll need on that, anything like that you bought this year, is the purchase price, including sales tax, a description of the asset, the date you placed it in service, and if it's something that you use both for business and personal use, you'll need to split the percentage of the total business use versus the percentage of total personal use. This is a situation where putting this information together now is helpful because you can still remember the details. They're still fresher today than they're ever going to be. Depreciation schedules. So for anything that you have been depreciating over the years that you've bought in a previous year, I would need a description of that asset, the date it was placed into service, the original cost, any accumulated depreciation that you have claimed in all years for that particular asset. If it's mixed between business and personal use, I need the business use percentage this year, the recovery period that you're depreciating it for, and if you took any Section 179 or bonus depreciation in the first year that you had the asset, I would need to know about that as well. Now, when I finish a tax return for one of my clients, I give you 2 files. The first file is the tax return itself. It is the forms and the schedules that were required to be filed with the IRS and with your state and with your locality if you have local income tax. I also give you a much larger file that includes everything that's in that first file, along with all supporting schedules and worksheets. And included in that will be a depreciation worksheet for every single fixed asset that you had on your tax return that year. So if your previous tax preparer gave you such a form, then definitely include that in the information that you give to your tax preparer this year because we will need it. If you disposed of any assets, and by disposed, I mean you no longer use it in your business. You disposed it from business use. So if you sold an asset, you traded it in for something else, if it's broken and you had to throw it away, or if it's something that you're just not using your business anymore, so you discarded it, then that would be an asset disposition. So for any assets that you stopped using this year, I need a description of that asset, the date you sold it, traded it in, or stopped using it. If you sold it or traded in, I need to know the price, either the sales price or the trade-in value. Any expenses incurred in the sale. If you had to pay a commission fine to buyer, that is something that we can adjust your basis for. If it's something that you don't use anymore and you incurred, say, a hazardous waste disposal fee or maybe a transportation fee to haul it away, that can be used towards adjusting your basis for that asset so that we don't calculate more gain on the asset than we should be. And also prior year's depreciation on that asset if it's not provided elsewhere. But if I've got your depreciation schedules, I should already have that information. And last but not least, and this is the one that usually requires a lot of lead time for business owners, is vehicle information. If your business owns a vehicle that is used by employees and owners for both business and personal use, or if you use your own personal vehicle for both business and personal use, the data points I'll need to see for everybody are miles driven for business, personal miles, and commuting miles. My recommendation, keep a notebook in the car. Simple notebook. And inside, you're keeping track of your business-related miles. I sprung for a hardcover notebook, but I mean, it's a small notebook. It's fairly thin. Actually, I didn't even spring for this. This is a free swag notebook that I got at a trade show I attended last year. I keep it in the passenger side of my car. Every time I drive on a business-related trip or outing, I write down the date, where I went, basically where I started, where I stopped, the business purpose for the trip, and the number of miles I drove. Also in this notebook, write down your odometer reading at the beginning of the year. When you get home, so in prepping for next year, when you get home from your New Year's Eve party on Saturday night, write down the miles you see on the odometer in your notebook. When you get home from your New Year's Eve party next December 31st, write down the odometer reading in your notebook. The difference will be the total miles the car was driven during the year. And then you'll use your individual entries to determine which percentage of that total is business related. And it will look something a little bit like this. This is something real quick I put together just to illustrate. So let's say I got home from my New Year's Eve party last year and I had 108,000 miles on the car. And let's say this year's already ended, New Year's Eve, I've got 113,000 miles on the car. Up in the middle section, you'll see the business-related trips, where I started, where I ended, why I made the trip, number of miles. If I incurred any tolls or parking, I write those down as well, because no matter what method you're using to deduct your vehicle expenses, you still get to deduct tolls and parking. So definitely keep track of those. And what I've figured out here is that in this particular year, I drove 4,388 miles. Of those miles, 979 of them were business related. So for all of my calculations where I have to allocate a cost amount to business for deduction related to my vehicle, it's going to be 22.3%. That was the total business use of my car during the year. Simple enough. Two methods to deduct business expenses for your vehicle: standard mileage or actual expenses. Standard mileage is simple enough. It is the number of miles you drove for business times a set number of cents per mile. Actual expenses is exactly what it looked like. You are going to gather receipts for all of the different expenses that you had for your car: fuels, repairs, insurance, registration fees, if it needed new tires, basically everything related to the car. Actual expenses for personal vehicles can only be used if you own the car. If you lease the car, you need to use standard mileage. If you borrowed your parents' car, talk to your tax preparer. We're going to instruct you a little bit differently, and every situation is different, so we would need more information before we could help you with that. Actual expenses. If you use actual expenses, you must claim the depreciation expense. If you use mileage, wear and tear on the vehicle is built into the mileage rate. The mileage rate it's a catch-all that's used to help reimburse you or give you a deduction for the use of your personal car that should cover fuel, repairs, insurance, registration, and wear and tear on the car. And wear and tear is a fancy word for depreciation. So it's all included in mileage expenses. So you can either use one or the other. You cannot take both. The only thing that you are allowed to take, regardless of which of these methods you're using, is parking and tolls, business-related parking and tolls. Also, one more note on mileage. If you are writing in your notebook, the date is very important some years. Like in 2022, for example, the mileage rate changed on July 1st. So miles that you drove in June were different than miles that you drove in September as far as how much you get to deduct for them. And this is subject to happen in any year. The IRS sets the rate for the year before the year starts, but if circumstances warrant it, they will change it mid-year, like it did this year when gas prices went through the roof in the spring. So definitely keep a good log, write your dates. Regardless of which method you use, if you have expense for parking or tolls, write these down in your notebook. Easy Pass holders, line up your monthly statement with your mileage notebook to pick off the business-related tolls that were paid so that you can have that evidence to support your deduction for tolls. And also, when you file your tax return and you put business miles on there, there's a checkbox where you have to check off to say that I have evidence to support my deduction and this evidence is written. Notebook covers both of those things. Easy peasy. S corporation owners. If you own an S corporation, when you applied for S corporation status with the IRS, they sent you a letter back saying, congratulations, you're an S corporation as of this date, and there'll be a date on there. It will also tell you that as an S corporation owner, you are expected to pay yourself a reasonable salary and remit payroll taxes to the proper authorities. What this means is that you are technically an employee on your company's payroll. Because of this, And because of the Tax and Jobs Cut Act of 2017, that means you are no longer eligible to claim vehicle expenses on Schedule A for that business. There is a workaround. Your company can establish an accountable employee expense reimbursement plan that can be used by your employees, and in this case, that would include yourself, so that your employees can submit mileage on an expense report to request reimbursement from the company. So as the business owner, you would establish this plan, include the plan documents with all of your other business related documents and policy documents. You establish a template that your employees can use to request reimbursement for business-related expenses paid out of pocket. And then you would use that form to claim your business mileage and submit it to yourself for reimbursement by the business. The business will reimburse you for the miles at an appropriate mileage rate, and then the business deducts that as an expense on the business tax return. The other solution, if the vehicle is 100% business use, just have the company buy the vehicle from you, and then it's a company vehicle, actual expenses. It's all on the business tax return, and it's a whole lot cleaner. And also, if you want more information about Accountable Employee Expense Plan, there should be a link that I'm going to embed in this presentation that will bring you to my LinkedIn profile. And then look for an article in there called S Corporation Home Office Expense. It's written geared towards home office expense plans, but the same concept applies as far as being what you need to do to establish an accountable employee expense reimbursement plan. So that might be useful for you to see. Rideshare and delivery drivers. You might not have a lot of business expenses, but there are some that you're going to have, and you're going to want to keep track because you should be able to deduct those. If you keep bottled water and snacks in the car to hand over to your passengers, save the receipts. That's a business expense. Delivery drivers, if you buy insulated bags to help you keep food at the right temperature when you bring it from the restaurant to the other person's home or business, save the receipts for those bags. That's a business-related expense. Anything else that's used only for the business to provide a better customer experience is a business-related expense. Hang on to the receipt. You should be able to deduct it. For example, if you bought one of those octopus chargers that you could charge any kind of phone with because it's got all of the different adapters on it, and you've got a passenger saying, whoa, my battery's low, I'm going to die before I get to the hotel, you can hand that over to them. They can charge it. They're happy. They tip you better because they're happy. But that charger would be a business expense. Can't save the receipt and deduct it. If you are tipped in cash, write it down in your notebook. And I say this because you're not going to remember all of the cash tips you receive, but whether you get paid in cash, credit card, whatever, tips are taxable income, cash included. So write it down because you are not going to be able to remember that. Always save your receipts or save pictures of your receipts in a file that's searchable. That way, if you do get a question about a line item on your tax return, you've got everything that you need to give them what they want and get them out of your hair. So most of this information can be gathered now. It's the last week of December when I'm recording this video. Last year's business tax return, you should already have it. Your partnership agreement, you should have had that as soon as you filed to start a partnership. Your accounting records are almost complete. You've got 11 of the 12 months. Bank statements, credit card statements, you can be gathering. Payroll reports, you've got 3/4 already done. You can pull those down now and just wait for the last one. Fixed asset and depreciation information. This is a great time as you're looking through your bank statements to say, whoa, that might be a fixed asset, and try to gather whatever information you need for it. Fixed assets, going to be a lot easier to remember what you did now than it will be 3 months from now when it's almost time for your business tax return to come due. So you can just take a little bit of time to reflect and gather information. It's going to be so much easier for you than trying to scramble at the last minute, because in my experience, people who wait until the last minute to scramble and find things miss things. And 9 times out of 10, we end up having to amend that return because they found a whole bunch of receipts that they didn't find when they were tearing the house apart on March 10th, trying to get everything together. So whatever you can do now, it's going to be so much easier for you if you can just start thinking about this and putting the information together now. Same with vehicle information. This is the hardest one for people to recreate if you have not been keeping your notebook. So if you use Google or Apple Maps and you have a timeline, that might help you recreate your year and help you determine which of your trips were business versus non-business. So that's actually something where if you print that up and make your notes on it, that could be your written evidence for your vehicle information. Looking through your calendar and seeing what appointments you have in your calendar and trying to recreate your miles from that. Like I said, the earlier you do that, the easier it's going to be because memories fade over time. So taking the time now to gather documents is going to spare you from a lot of frustration later on. If you like this video, or nobody likes taxes. If you found this video useful, please do me a favor and hit the like button and click subscribe to see future videos that I will be putting out there to help you put your tax returns together. Thank you for listening.